Morning traders, Paul here with GammaEdge. Today is Wednesday, the 10th of May. Let's get started. Pause your players here, read to the very bottom. If you agree, hit that play button. Summary for today, we're kind of in this mixed pattern. We're going to still call it bullish. We've been whipsawing back and forth here. Market's been just coasting sideways more or less. That said, the cumulative tick closed above the previous day. This will be a trigger day long. This is another whipsaw. We've been whipsawing back and forth. The railroad track pattern, which is a little more momentum in it, had a continuation day up. We're in day 3 now, and if we continue up, we will have positive gains within the account. But watch for reversals and whipsaws. They're highly likely. We've been back and forth, back and forth. The overall longer-term model is mixed. We have had a couple changes here. The real key takeaway here is that the CT is below the ribbon in the NASDAQ. So technology stocks really are not performing across the board. Just a few are leading there. ARCX, which is the NYSE, the NASDAQ, and the AMX, still remains on a continuing bullish signal. Everything else is weekly bullish or weekly bearish, so we'll just want to wait and see what happens there. Not getting a broad confirmation across the board in terms of buying for across the indices. Market breadth is viewed by the 52-week new high, new low indicator. Had the 52-week new lows outpacing the new highs. This is a reversal over the past 2 days. 270 down, 156 up. This is a lagging indicator, but we use it as more of a confirmational bias of what's happening, and our stocks underneath the hood really starting to participate. They're not. So just be aware of any rally here is still, we're looking to see some broad-based here, and we're not really seeing that. We watch the ES. Gamma levels show a drop in what is called positive gamma exposure. This is indicating a possible positioning play of convexity to the upside. So what this means is that as those calls come in closer to spot price, any move upward will play that, and they'll get that leverage effect from gamma. Yesterday showed a drop in transition levels, and the same thing happened today, or the overnight session, and this indicates possible play to the upside as calls are added. Yesterday's move upward to 4,000 of minus GEX is a possible indication of a play to the convexity to the downside. So it'll be interesting to see what happens now with CPI and whether that moves up or down. Transitions, we closed at 41.19. The PM settled SPX and the 0DT are both at this 41.25 to 41.30. It's unchanged from Tuesday. So this is really the short-term liquid area in the sand. We just want to keep line in the sand, want to keep view of that. For the combo complex, which is the AM plus the PM, we're at this 41.10, 41.15. That is the absolute line in the sand for the entire complex. N-trans has moved up, P-trans is unchanged. Puts were added, calls were closed. This could be a possible convexity play to the downside. Market doesn't really know which direction it's going to go. We're very well balanced, and you'll see that as we go through these screens. For the 0DT folks, we have a lot of them in the Discord. 41.25 is N-trans. This is negative transition. 41.30, as I said here, is P-trans. These have dropped a strike, indicating a slight bullishness as out-of-the-money calls were added. Upper charm is 41.60 today. If we take that, we could push higher very quickly. We may see some stalling in the 41.45 to 41.55 area as we move up. We'll just have to pay attention to that. And the lower charm dominance starts at 4100, and it gets stronger as we fall. So just be aware of that too. So really, the numbers we're watching for today is 4160 and 4100, and how we behave around that will accelerate most likely in each direction. The market model via the cumulative tick, not predictive. We've got 3 really superimposed time frames here. The longest term time is the colorful ribbon we see right here, and you can see it's in a clear uptrend. Short moving average on top, longer moving average on the bottom. This bolded white line is the cumulative tick, and you can see it closed just briefly or marginally above where it opened up. That's important, but it is above in general the ribbon. This is a bullish scenario, and then the railroad track pattern. We had a continuation day. We're only looking at the end of the day status. We don't really look at the intraday here, and this is basically continuing upward And so this is a bullish. This is a bullish signal in the ARCX model. As I said, though, the other models are weaker, and just be aware of that. Gamma on the ES. As I indicated, plus GEX has dropped from 4,000 down to 4350. Want to pay attention to that, you can read why. Plus trans has moved down just a little bit, and minus trans has moved down a little bit, and you can read why. Everything else is unchanged. When we take a look at gamma across the PM settled complex, we do separate these. First thing that's notable, fairly significant amount of contracts here, balanced. You don't get much more balanced ahead of CPI. And if you think about this, this is really remarkable. We are basically neutralizing in the PM complex gamma exposure. And we can see it. We're able to measure it. And that tells us we're right at the fulcrum of the teeter-totter. If we do break upward, 4,200 is the real key that is in everybody's crosshairs. We think the dealer model starts shifting above 4150, 4155. You can see the deltas really become out of the money call dominated above this in the PM complex. That's important. We are starting to see, though, out of the money put speculators come back into the equation. So below this 4150, you can see where the deltas turn red. That is, and below the yellow line is out of the money. So in the money, so near the money, puts have been added, calls closed, as well as out of the money puts being added. 4050 is really that downside limit that we're seeing in the overall complex. Taking a look at the 0 DTE. Could break either way, of course. We had very, very tight transition. We closed just below it. That's notable. Fairly strong amount that is coming off here today. You can see the 4,200 has got the dominant call open interest expiry for today. 4,160 is the key level in the 0 DTE today. If we can get above 4,160, this will all become in the money call dominated, and everything here, these positive charm flows will continue to decay. This will become a very significant positive charm flow, and that could actually push us up. If that occurs, for whatever reason, 4,200 certainly could be within the realm of possibility. We don't think we're going to get anywhere near this level, but just looking at the contributions and the length of the runway here, 42.15, 42.20 is in the realm of possibility, although the expected move open, high, low, close, and this is a very conservative number for our premium sellers. Rarely do we tap this, and so we don't think we're going to get up that high. If we break to the south, things get dangerous pretty quickly. This is if we get trapped under this 4105, 4100, you can see what's going to happen here. We start pushing these out of the money puts in the money, and as we push a put into the money, charm flows flip negative, and that starts putting downward pressure on things, and that could embolden the bears. So watch the value, $value, SPXP command today. You can tack a 00 on the end of that if you want, and just watch the intraday action. So really we're watching for targeting above 4160 and to the north, and we're watching for targeting at 4100 and south. If we see a lot of puts being opened up down in this mass here, that could pull us downward. Again, it depends on what CPI does. If we see a lot of calls being opened at 4160 and above, that could actually open us up and push us upward towards 4200. The 1 DTE, this is our positioning into tomorrow. Again, same warning, 4100, 4095. You can see this double structure here. If we move down into the close today, for whatever reason, CPI traps us down here, whatever the case may be. If that occurs, what is a out of the money now becomes in the money on the gamma side and on the put side, and that becomes a little bit dangerous here. That could become an overhead resistance as those charm flows will continue to push us down. That stated, fairly clean. Just want to call out this little area down here at 39.70 to 39.50. We're unable to determine the direction. It looks like these were at the midpoint, so we can't ascertain, was this a premium seller or a premium buyer? Either way, it doesn't really matter. This goes away tomorrow. So we do think there's a floor in here, of course, so just be aware of that. Now, to the upside, very interesting structure here at 4170, 4175, and 4195. Not 4200, but 4195. And why this is important, if we for whatever reason, as we move up towards a Livermore level ending in 00 here, we could actually stall into this area. And if we do stall into this area, if we can capture this, that would be great, because now these become in the money call dominated, and that would be, very, very powerful for tomorrow. Those charm flows, etc., the moneyness, the deltas, etc., will continue to grow. What's important here is, though, this entire region between the 4180 and 4195 zone could be an overnight parking area, but it could also include a new basing zone to push even higher. So if we get calls opening up into Friday, Monday of next week, etc., it could be very, very interesting here. Again, note the 1DT, almost perfect balance. That said, very low open interest for Thursday, so don't torture the data to tell you what you want to hear. Wait until you see what develops this afternoon. The crystal ball view through next week. So this is the SPX Combo Complex. This is the AM and the PM settled complex, almost net balanced. And this is remarkable because there is a large amount of contracts here. So we turn on through the end of next week. Just want to see what the structure looks like. The key takeaway here is that we've still got a very significant presence of out-of-the-money call speculators, although we do have a few cracks in the ice between now and next week. This is where either the call speculators aren't there or the put speculators are rearing their heads, or in the money puts, I should say, are rearing their heads. The out-of-the-money put speculators are really starting to dominate the downside. This is a change from yesterday. 40-50 here to the downside. Want everyone to start watching this particular area down here. We're starting to see a little bit of weakness down here. Again, we don't know if CPI is going to go south or if it's going to cause us to go north. But if we do see continued erosion and the out-of-the-money put speculators starting to appear, we could see this development right above the dominant strikes here at 4,000. Taking a look at the combo complex, which is the AM and the PM for all expiries turned on, as you can see over here in the tiles. Still, 18.5 million contracts, and we're basically balanced ahead of the CPI. It's slightly bullish. We can break either way. There's no question about this. Do want to call out that we are starting to see OTM calls starting to vaporize, right? They're losing their overhead dominance, so the in-the-money puts are starting to come through in context of the deltas. That stated, right here, 4190 and above, we still have a clear runway for the out-of-the-money call structure. That's pretty important, and we want everyone to see that. 4110, 4115 is a transition, very tight, very well defined. There's no ambiguity here. This is important as we go through here. And then out-of-the-money puts are starting to appear. And so as we erode the foundation below us in the combo complex, that's important, because this is going to be, as they start rolling those AMs out ahead of next week's expiry, that will take big chunks of money and redeploy it into June and beyond. So just be aware of that. Where they put that money is going to matter. We will see that indirectly through this. All of that stated, we still have a very dominant in-the-money call structure, but are watching these cracks. Want everyone to pay attention to the strikes where these cracks are appearing, and we'll just keep tracking this day over day. Final picture here, the landscape view. We had a slight reduction in the 4,200 strike, and you would say, well, that's because Gamma moved down or the spot price moved down, so Gamma moved down. Yes, but right here, 4,300 is stronger, so it's not as simple as everyone likes to say there. We actually did see opening of some short-dated calls up here at the 4,300. Doesn't mean that we have to get up to 4,300. We just have to move in that direction to get any of that convexity as you move up here. So we are watching this, and as many of you are aware, we played the same game last week. 42, 43. 43 was the actual strike for Friday, and we played that convexity, and then we dropped again back to 42. So this is the dance we've been playing in the combo structure, and it just shows that people are playing the end of the week to the upside. JPM and a month end of quarter for June, short call sitting right here at 43.20, probably represents the upside limit. A very clean transition here. This is the first time in several days that we've looked at something this strong. And then left goalpost down here at 3,900. No danger of this, but again, if we close below this 4110, 4115, you can see what happens. We're emboldening down here to this side. So just want everyone to pay attention to that. This is kind of our line in the sand, and so we're adding on any pullbacks, we're adding positive deltas. On any loss of transition, we'll start adding negative deltas. So with that, I bid you farewell. Hope to see everybody in the Discord. To join, come to GammaEdge.us, upper right-hand corner, click on the pricing tab, fill out the blanks, come on in. 14-day free trial, all the tools turned on, no risk. Great group of traders, educators. We have a great time, and would like to see you there. Follow us on Twitter, please, Gamma Edges. We're almost at 6,000 people. That's great. Thank you very much. And then here on YouTube, two things. If you like today's commentary, let me know, because if you hit that plus or thumbs up button, it'll give me immediate feedback that I'm providing content that you want to see. And two, subscribe, because Taylor and I post videos and we want you to see what we're seeing. So with that, I bid you farewell. Hope to see everybody in the Discord. Take care, everyone.